Hello, I'm Greg Hunter. Thank you for joining us today on USAWatchdog.com. One of the things in the news is the rising price of gold. And we have today, once again, Jim Sinclair of JSMindset.com. Jim Sinclair, thank you for joining us today on USA Watchdog.
It's a pleasure to be here, Greg.
And I'm just going to skim over your resume. You have a deep resume. You've been a brokerage holder. You've worked for Paul Volcker, selling silver. The big build back in the '80s. You're a CEO of a company, Tanzanian royalty. You are a big-time investor. You're one of the great minds, one of the top gold people in the world. So let's start with gold. Had a nice run since the beginning of the year, 15%. And it's and the possibility, you said, that it could hit $50,000 an ounce. Are you still sticking by that?
Oh, I am sticking by that. And the $50,000 an ounce is predicated on a shift in the mechanism for determining gold's value from the paper markets to the physical markets. Should that emancipation of gold take place, then $50,000 is a possibility and could become a reality.
Well, I wanted to talk about, you've been saying for a long time that the markets have been manipulated, and you're a guy who used to trade in the gold market and did it quite successfully. And you've been saying for a long time it's been manipulated. Well, now we've had, several revelations. We've had the German regulators say it could be worse than LIBOR. We've had reports and studies out from the foreign press, even published on Bloomberg, saying, yep, the gold market's manipulated. Has been manipulated for 10 years, one report says. Are you surprised by that?
Not at all. I mean, I come out of the 60s. I've been 54 years in this business, most of the time spent in the gold market. And the fix has always been fixed for the positions of those who are doing the fixing. This is nothing new. We knew this back before gold was legalized. And nothing has changed. It's only become more prevalent, more well organized and automated.
Do you think they're going to lose control of the price fixing mechanism? Do you think they're just going to run out of gold and all of a sudden you'll get what you say, emancipation?
Something has to happen. The emancipation of gold from the paper market is a product of the drawdown on the inventories of the warehouses. I don't believe for a moment that COMEX is going to default, but I believe quite certainly that the COMEX will shift from settling in gold to settling in cash. Now, when it settles in cash, it's just like an option market. The significant volume that you're able to get into the paper market comes from a large degree from hedging, from the producers as well as from the consumers of gold. And the reason why they can hedge is because it's actually settled in gold, meaning the banks can lend against the hedged positions. The banks can't lend against a hedged position which doesn't settle in gold, only settles in price, for the same reason that no bank lends against an option.
So they have to have the gold to control the price, in short.
To have the volume. In other words, to have that volume of trading, they have to have the gold. And they have to have the paper facility in order to control the price of gold. I mean, confessions of a manipulator. I put gold through 400 on the upside twice. The last time it went straight to 887.50. Now, I'm not saying that that's virtue by any matter of means just because it happened to be long, but I can tell you exactly how it's done. You just offer or demand supply in a period of illiquidity that's beyond any capacity to be met. We've already had one day where 2.5 years of production was offered for sale. It couldn't be in a physical market that has to deliver within 3 days. It can only be in a paper market that doesn't have to deliver. That all you have to do is put up cash. And if you declare yourself an arbitrageur, if you declare yourself a hedger, if you are a metals dealer, the amount of cash you have to put up is minimal.
You are going to be the chairman of a new gold exchange in Asia. How's that going?
It's coming along. It's not an easy thing to do. It has to have its platform. We have to have the supply and demand. We have to be able to do the volume, but it is in the works and is coming along. There are approximately 9 other entities in Moscow and Hong Kong that are going for cash exchanges. So we're number 9 of a group of people, of entrepreneurs who see this shift from paper to physical.
And then when you have this physical market, and one of 9 in the world, it'll be, if you want to sell your gold, no futures, you bring it out here and we'll sell it for you.
Think of it as a spot contract with gold in a warehouse. Spot contract with gold in a warehouse.
If you don't have the gold, you can't sell it.
You can't sell it if you don't have the gold, and you can't buy it unless you can produce the money.
All right, and let's talk about the Ukraine situation. I mean, this is last time we talked, this wasn't even a blip on the radar, and now
No.
it's become a huge deal.
Well, welcome back to the Cold War that could get hot overnight.
Well, Paul Craig Roberts said, Reagan stopped the Cold War, and Obama has brought it back.
He's brought it back by changing the let's say, new normal diplomacy, making outrageous threats on a continuing basis rather than seeking a solution.
Well, the people in Crimea are overwhelmingly Russia. The parliament has already voted yes to joining or affiliating with the Russian Federation. The people are voting overwhelmingly to vote for joining the Russian Federation. Basically, how can we sit there and say people should have the right of self-determination, but with Crimea we say, well, that's illegal. That's something that's not legal. It's against international law. How do we say that? How do we justify that? And what are the Russians? What's the Russians' move on the other side of the table?
Well, to say that is to deny previous agreements. To say that is to deny the reality that the government in the Ukraine is a government created by a coup. To say that is to bring us to the brink of war. NATO is on the Belarus border. Belarus is accepting aircraft from from Russia to stand down NATO. Mistakes can happen. War can start anytime you've got two entities together with weapons of war, looking at each other with lots of hate. Just a simple mistake can put you into what could develop into a very serious conflict. I'm concerned about the mistake of having aggressive machinery and aggressive people looking right at each other.
Well, this mistake is probably going to be preceded with some sort of economic sanctions, economic warfare, which is already going on. And one of the things they're talking about is to, ultimately remove Russia from the SWIFT system. In other words, don't let them use the international payment system. And Russia's counter move may be we want payment in gold and silver for our oil and natural gas. And they'll do that selectively, for Europe and any Western allies, gold. For China, yuan's good. So what do you think about that?
You make a few points there. One is the use of the SWIFT system to prevent or to create a difficulty, almost a prohibitive difficulty, in doing business by preventing bank wires. That would be one of the possibilities. But already the BRIC nations are developing their own SWIFT system. So the mistake in using the SWIFT system, short of absolute war, is that it has created a competitor that all the BRICS will be using. So the use of the SWIFT system in the Iranian situation, even though used selectively, was, in my opinion, a mistake of using a very powerful tool prematurely. That's something that when you have a hot war going on, you try and stop the economic functioning of your opponent. By using it in a Cold War type situation, all you do is create the mechanism to compete with the SWIFT system. SWIFT system is a Western communication system only. It's a platform only, and platforms and communication systems can be easily created. So I would suggest that the use of the SWIFT system, if it should be used, and it is most likely, will create competition, which will make the SWIFT system in time not a tool to use, basically an ineffective tool. To sanction Russia is to forget that Russia supplies Europe with its gas supplies. To sanction Russia is to forget there are many European and U.S. corporations operating within Russia right now. I honestly believe sanctioning Russia is the same as shooting yourself in the foot. You're apt to, from the backlash, the creation of a new SWIFT system and sanctions against U.S. and Euro property in Russia to be equally as bothersome to the Western powers as anything the Western powers can do to Russia. This is a Cold War that could turn hot in a second.
Well, if there's all kinds of talk that the Russians would just walk into U.S. and European entities over there, businesses, and just say, "Hey, these are ours. We're nationalizing everything. You have Your countries have basically sanctioned us, and here's our sanction to you. Get out.
Well, when you think you can push an ex-colonel of the KGB, you're not making a proper analysis of a personality and of a person. So far, Putin has been very mild in his public statements. So far, Putin hasn't warned of any significant actions. He's actually conducted himself, what you could say, in a, if there can be a gentlemanly manner in international relations, he certainly is on that side. While we continually warn of draconian actions against Russia, I would say that he would be controlled in his actions and step up his retaliation according to the need of the moment.
Actually, one of the Russians I read last week that one of the Russian officials there said their sanction would be symmetrical.
Well, according to what is done in metered retaliation. Yet that's so dangerous. I mean, the whole idea that Russia is only a regional power, where in the world did that come from? Anybody who is nuclear capable to the degree and with the delivery system to the degree that Russia has is a world power. I mean, we hear constantly that it's only regional. We hear lies. We hear untruths. We don't have a clear picture of what's taking place. Corporate as well as mainstream media is tuned into Russia as the aggressor, while in truth there's a coup that created a new president in the Ukraine who is no more legitimate than, and I'd say less legitimate than Russia's presence in the Crimea. Well,
they have a base there, according to Dr. Paul Craig Roberts. They have a lease on it. The Black Sea Fleet of Russia. They have a lease on it until 2042. They already had 25,000 troops in the country. They already had that there stationed. They were able to have it.
By agreement, by treaty,
when
they gave the Crimea to the Ukraine.
That's right. And so
they have a legitimacy of being there to the tune of 25,000 troops by agreement.
Well, this referendum that's going Russian, I mean, the people are now voting. The parliament voted. Now the people have voted. And, how do they walk this back and say, oh, all these people voted to be part of Russia or affiliated with the Russian Federation, it's illegal? That's just not going to sell in Europe. It's not going to sell here in home. I mean, they're saying that Russia's doing it at the barrel of a gun. I don't think so. I think these people speak Russian. I think they're Russians.
They are Russians. People should study what the Crimea is. I mean, they're more apt to be riding reindeer than horses. They are Russian citizens who were given to the Ukraine who want to go back home. It's very difficult to call that illegal or to call the present government of the Ukraine legal, which came out of street riots.
Well, let's get back to the financial system. Could these sanctions? I mean, if let's say it doesn't turn into all-out war, couldn't these sanctions implode the global economy? Couldn't it be the beginning of the end?
What it could implode is your point number 2 that you just made. When the U.S. dollar came off the gold standard, Nixon put the U.S. on an oil standard. And through negotiations with Saudi Arabia, then the major source of energy, created an agreement that all energy contracts would be settled in dollars. And the petrodollar is the area of demand. In settlement for contract, you've got to go buy dollars to settle the contract. So the petrodollar is the standard on which the U.S. dollar maintains its strength. Now, recently, on the move below 0.80 on the USDX, it almost seems as if the dollar lost its mojo. It has not been under 80 for any significant length of time. The Exchange Stabilization Fund has been in there on a continuing basis to bring the dollar every time it comes down into the 80 area to 80.50 or maybe 81.20, but to give it some sign of strength. Now, it's struggling under 80. I think it's struggling under 80 because it smells the real teeth of a retaliation for sanctions being in the simple acceptance of any currency whatsoever for the payment for gas to Europe. And believe me, they'll settle in other currencies. to settle in the euro is much easier for the energy dealers. But the strength the dollar has is that you must go into the dollar market, purchase dollars in order to settle the energy contracts. We have gone to war, Greg, over the petrodollar. If the petrodollar is to be weakened to any degree whatsoever, it shifts the entire strength. It's like a shift in momentum. So the petrodollar is the momentum of the U.S. dollar. And should the petrodollar be challenged by the acceptance in any currency for energy by Russia, then you've had a change in the momentum, and you could have a 7,600 very easily on the USDX for the U.S. dollar.
So Russia could not only say, hey, we want gold for our payment, but they could say, hey, you know what, we want you to pay us in rubles.
Well, pay us in anything.
Or pay us in yuan, or pay us in euro, or pay us in real, or pay us in rupee. You can pay us in anything. No longer are we taking just dollars.
Doesn't have to be rubles. It means foreign exchange transaction doesn't have to be done by the major energy consumer. Makes things very simple. Makes energy cheaper by the foreign exchange relationship. So why in the world would anybody want to pay in dollars if they can pay in their own currency? And you would have the dollar under pressure that it hasn't been under before. And that's what the dollar is showing you by not being able to rally back over 80 when the stock market is under such significant pressure. That's euros selling U.S. stocks should convert. You should go into safe havens. You should be buying the treasuries and buying the U.S. dollar. So why is it under 80? It's under 80 because the dollar looks out beyond where it is right now and says, no, Russia could retaliate in a manner that would have a phenomenal impact on the U.S. and on the U.S. dollar, not by selling treasuries, not by anything else except saying, well, I'm not in the SWIFT system, so, hey, pay me in dollars. Pay me in any currency you want other than dollars.
Woo, what would that do to the price of gold?
I would say gold would be between 1550 immediately. And I'd say that the U.S. dollar would be 76 on its way to 72 on the USDX.
Would there be any coming back from that? Once Russia started doing that, would there be any coming back from that? Wouldn't that be the beginning of the end of the petrodollar? Wouldn't Saudi Arabia, who's not really happy with us, say, you know, we're going to do what Russia's doing. We're going to take payment in yuan, rupee, euro. We're going to take payment in all kinds of currencies.
Anything. So if we can equate that to something, the dollar is the common stock of the United States. It loses a significant amount of demand, which does what? Breaks the momentum of its trend. You break the momentum of the trend when a bull market ends, a bear market starts. When a bear market ends, such as in gold, a bull market starts. When the bull market in the dollar ends, a bear market starts. And Russia has the capacity, the ability, the inclination, of course, to just do one single thing: accept payment for energy in any currency you wish to give us. You've got the euro at $1.45 to $1.50, and you've got the dollar at 72 to 76 on the USDX.
Energy in Europe, they get a bonus, they get a bump. Their currency would go up, energy prices would go down. They'd be saying, "Hey, we like this deal with Russia. We like paying for our natural gas and oil in euro."
Merkel would shut up and smile.
Ooh.
Instead, yes, because isn't it cheaper if you don't have to do the foreign exchange?
Yes.
Doesn't it? The euro, there's all this. You want the euro cheaper for trade. You want the euro stronger for the long term.
Well, this would be a disaster for U.S. consumers. I mean, all of a sudden, they'd be hit with some pretty significant inflation. I mean, gasoline would go from, $3.50 or $4 a gallon to what, $4.50, $5 a gallon?
What have I been saying for the last 12 years? Currency-induced cost-push inflation is the type of inflation which can create hyperinflation in the worst of business conditions. If the cost of what you import skyrockets, what happens to the price of what you're selling locally? Skyrockets.
Boy, this is a pretty ominous technical view of what could happen with this. I think that the whole thing has been clumsily done, and it looks like they're not thinking past their nose. They're not thinking that this is a danger. The other danger is the war scenario. And I've been saying on my site that the people say, well, they're going to end up dividing, Ukraine down the middle. Oh, well, really? That Russia's going to allow NATO to have in the western half of Ukraine, they're going to allow them to have missiles and troops and defensive capabilities and offensive capabilities. A NATO country pulled right up to their border. Do you think that's going to happen?
Have you thought for a minute what the IMF is about to do to let's call it the Western Ukraine? I mean, they're going to lend them the money they need, and the money they need is $37 billion, not $15 billion, because you got the 2015 payment to consider. They're going to do the same thing they did to Greece. The people in Western Ukraine are going to be screaming to be Russians in about 6 months without any problem. The retiree now getting $165 a month under the IMF plan will get $80 a month. You think he's going to be happy to be in the so-called free Western Ukraine? He's going to want to be a Russian. There's literally no question that the IMF will take care of delivering the rest of the Ukraine to Putin by their economic requirements when making a loan.
He's massing. They've been massing troops on the border. The Russians have on the Ukrainian border. Do you think he invades, or do you think he waits?
Listen, you see a guy riding on a horse without a shirt on, okay? You see him at a gun show looking at guns. You see him holding a gold bar. You don't have to be a genius to know you can't push him. This is a KGB guy. This is a guy who has no conscience. This is a person who would put his mother in a microwave for $5. You push this guy hard on the Belarus border, you're going to have Russians coming across the border. I mean, God forgive them, for they know not what they do. We're being pushed by a group who have an ideology that wants war. And we don't have the mental capacity in other leadership to recognize that Russia has the upper hand. The petrodollar is the singular most important factor that exists in economics today, bar none. And Russia's got it right Russia has it in their hand and can, at a moment's notice, retaliate in a way that would bring in a market crash in the Dow, the likes of which you've never seen in your life.
Brilliant in its simplicity. We just accept payment in any currency. Oh, we can't use the SWIFT system? Even if they still can use the SWIFT system, they can just say, you know what, we've decided we want payment. We accept payment in anything. Rupee, real, yuan, euro. We take payment in everything. We no longer take payment exclusively in dollar, with or without the SWIFT system. You're saying that would kibosh the economy in the U.S., spike inflation, and cause gold to renew its bull market trend.
There's no other possibility that except those results. They have a stronger tool than the SWIFT system. If we didn't reinstate them in the SWIFT system in a week, the entire environment would collapse.
Even if we don't take them away from the SWIFT system, they could just simply say, we want to sell our oil and natural gas in any currency. Couldn't they do that?
This is why I've been trying to get my editor to put a cartoon in which Uncle Sam shoots himself in the foot. And it says on top, he's got a target on his foot. His foot's up in the air. Now, my editor won't put it in because, he's very, very sensitive to people's feelings. But the truth is that to take Russia out of the SWIFT system is to put a bullet right in the U.S. foot. They have an ability to reciprocate in a manner that could cause us a total collapse, especially because of the derivative market, which is so tied to interest rates.
You're saying that they could retaliate and completely collapse the U.S. economy?
They have in their hand the ability to turn the U.S. economy upside down and into collapse. There's no question about it whatsoever. You could wave a flag all you want, but the truth of the matter is they have the power.
That is a stunning prediction.
It's a reality. I mean, it's not something you'd like to predict. It is simply a reality. Greg, we've killed people over the petrodollar. If you don't think Libya didn't have a great deal to do with wanting to take payment for energy in any currency, you simply haven't been reading the history of it. You know it. I know it. We know what they do for the petrodollar. You call it humanitarianism. It is like the Dickens humanitarianism. It's bombs to protect the petrodollar. What Putin has right now is a tool so powerful that it's almost unthinkable. He doesn't need nuclear bombs. He's got a nuclear economic bomb that he can set off at any time without having to launch a missile.
Well, that said, people are going to want to say, okay, so how high is the price of gold going to go in the near term and this year? I mean, where do you see the price of gold? Have we seen the lows?
We have absolutely no question about it. I mean, any technician that argues against the lows argues against every discipline of their science. We have absolutely seen a double bottom in gold, all the volume, everything we need to have lows. Gold's got $2,000 in its sights, or a challenge at least of 1918 in this 2014.
$2,000 in its sight in the year 2014. I know you're not a big silver guy, but people are going to say, ask him about silver. I know you're not a big silver guy. But, will silver go up in tandem with gold?
Silver's gold on steroids. When gold takes off, silver goes up faster. When gold breaks, silver comes down faster. So the idea that you're going to get an old high or better on silver, in my opinion, is a given. I think you'll still have the normal rhythms of markets, which might give you a little bit of sloppiness going into summer. I think the real market in gold comes in the fall, but I think before then we could easily get to 1550.
Jim Sinclair. Thank you for coming on and enlightening us with your the thing with the you know what? A light went off in my head. Somebody else was telling me, another guest was telling me that they'll demand payment in gold, and you're saying, oh, they don't have to do that. They can just accept payment in any currency out there. Oh, that's brilliant in its simplicity. Utterly brilliant.
And it's as powerful as demanding it in gold, but maybe more powerful.
God, a light went off in my head. Oh, a lot of people watching this are going to go, oh, my God. Oh, that's just simple. That's just totally simple.
Why in the world do they have to take dollars? Why do they take dollars for their gas? You know, they're paid in dollars for all that gas that goes into euro. Why not euro? I mean, the euro long term has got the dollar trumped for that reason. Euro? Don't you think that our Secretary of the Treasury, Secretary of State, should recognize the danger he is in threatening these?
Oh God, yes. To me, I just think, are they stupid? I mean, what do they think Russia's going to do? Oh, it's okay.
Hey, I'd meet with Putin. Okay, I'd say, how can we settle this problem?
Get off our border. Quit trying to make Ukraine a NATO country.
How can we settle this problem? What can we do to fix this stuff? Instead, they're looking for the damnedest explosion in the world. Monday morning. Okay, they're out of the SWIFT system. Okay, from now on, any currency you'd like to pay us for energy, we will accept. Well, blam, the dollar busts wide open. Stock market minus 1,300. No problem.
God.
Gold, 1,400 bid, 1,500 bid. You don't have to take delivery in gold, nor would they. Okay, take delivery in any currency you want. You'll put gold straight to 2,000 incrementally over the balance of the year. Then shift from paper to physical, and gold can go anywhere. Because if physical's in demand, what's the price? Well, the physical is in demand until it becomes equilibrium, it rises. Pretty simple.
Jim Sinclair, thank you so much for coming on USA Watchdog and enlightening us all. It's quite a scary situation that we have over in the Ukraine. And if you're a gold investor, you're about ready to re-enter a new bull market for gold, or the continued bull market for gold. Is that right?
Well, either way you'd like to look at it. I look at it as a continued bull market for gold, and it's very simple. I mean, all that Putin has to do, if we invoke significant sanctions such as the SWIFT system, is say, okay, from now on, whatever you want to pay me for my energy, for oil and for gas, you pay in whatever currency you want. The net result of that impact on the petrodollar would not only be a significant decline in the dollar, but I would wager you the Dow would be down $1,300 and gold would be somewhere between 14 and 1,500 bid. It is draconian to pull the plug on the major support for the value of the U.S. dollar, the petrodollar.
Once again, Jim Sinclair, thank you very much for joining us on USAWatchdog.com.
Thank you.